Hi guys, Brian here from CM Traders. As CM Traders, we teach Forex, we mentor, we also send signals. But on today's lesson, I'll be teaching you our first bullish reversal pattern. Let's get started. To understand our first bullish reversal pattern, you have to understand how a bearish market moves, right? So a bearish market will always create new lows. A bearish market will always create new lows. So you would have your, let me just say this is impulsive move and then pull back, right? Movement to the downside again, and then another pull back there, movement to the downside, pull back, movement to the downside, pull back, so on, so on. So it keeps on creating these new lows that you see right here. It will keep on creating these new lows if it's a bearish market, right? So now what I'm spotting here is as it creates these new lows, it breaks the previous low. You can see here it broke this previous low to create this new low. And then you had your pullback. After that pullback, the market came back again down to break this low to create this new low, right? Valid pullback. After this pullback, the market came back down to break this low to create this new low. So it keeps on doing that. So a bearish market will always it will keep on creating these new lows. So now for me to spot my bullish reversal pattern, I will have to see the market failing to create a new low. Let me show you how. So if I could have my valid pullback, right? And then the market comes back down, but as it is coming back down, it fails to break the current low to create a new low, but comes back up to break the current high, right? For me, this is my reversal. This is a bullish reversal pattern because why? The market failed to come and break this current low to create a new low, right? So the market is failing now to create a new low. But what it did was it went up, right, to break this current high. So the minute it breaks this current high, what do I do? What I do is I will then mark my order block. What is an order block? I will then mark my order block somewhere right here. It will be found somewhere right here. What is an order block? An order block, it's the opposite candlestick before the breakout, right? So I would go ahead and mark my order block. After I'm done marking my order block, what do? I wait for the market to come back and trigger my entry around the order block. So meaning my entries will be around the order block. My stop loss, it will depend with how far I wanna put it, but risk reward ratio for me, I use 1:3. Some people prefer using 1:2, which is still fine. Then I wait for the market to do what? To come back, trigger my entry around the order block, and then I manage my trade up until I exit. It's either I will exit there at the take profit. So yes, guys, that's the bullish reversal pattern. So you just have to understand how the bearish market moves for you to spot a bullish reversal pattern. So a bearish market will always create what? New lows, new lows, new lows. So how does it create these new lows? By breaking the current lows. But the minute you spot the market failing to create a new low, but going up to break the current high, just know that that's a reversal sign there. The market might be reversing, right? And then what do? We just mark the order block and wait for the market to come and retest to the order block. And then that's where we will enter there. And then yes, that's it there, guys. That's it with the bullish reversal pattern. Now let me go ahead and show you how I managed to catch this trade right here. using the same bullish reversal pattern, right? As the market was bearish, it kept on creating new lows, right? You have, let me just say it started somewhere here. You have it breaking this low that we have here, short down, pullback. It's a valid pullback that we have there. Came back down to break this low to create this new low. So this is our new low, a valid pullback there, and then came back down to break this low right here to create this new low. You see here, valid pullback there, came back to break this low that we have right here to create this new low, valid pullback again. Those are smaller valid pullbacks, came back to break this low right here to create this new low, right? And then the market pushed up, 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 up until it arrived there. That's also a valid pullback. Now on this valid pullback, the market went down, failed to break this low that we have here to create the new low. So what it did was it started playing before it could even reach the low, meaning it was just giving us a sign that it's failing to go and break that new low. So I had to wait up until the market came to break this current high right here. You can see this candlestick that we have right here. The market broke there, and then after the minute the market broke there, I had to mark my order block. This is the order block that I had, which is the opposite candlestick before the breakout. This is the order block that I had, and then I waited for the market to come back to the order block. Then as soon as the market came back to the order block, it triggered my entry, and then stop loss, it was somewhere around here, and then TP was hit there. Risk reward ratio is it was 1:3 there. So yes, guys, that's how I managed to catch that trade using the same bullish reversal pattern. So what you just need to do is you just need to understand how the market moves, right? Just have to understand how the market moves. If the market is going down, basically, it will keep on creating new lows. But then the minute it fails to break to create a new low, that's a sign there that the market might be reversing. That's a sign there that the market might be reversing.